If there's any particular business that you'd like me to cover and talk about, to pop it in the Q&A, and I'll attempt to do that as we go along. So the first one here is some of our big success stories in Australia, so Afterpay and Zip Money. Afterpay has a credit license. However, most of their financial products aren't actually covered by the credit licensing regime. So they're working off a particular exemption in the National Credit Code, which exempts them from having a credit license because they're not actually charging interest. So many of the compliance obligations that credit licensees have, including their responsible lending provisions, don't apply to them because they're operating in this carve-out. I'm sure many of you have read that carve-out is under review, so we'll see what happens. BrickX is an interesting one. So BrickX is a fractional property platform. So they are running a managed investment scheme. What I'll do again is flick here because I've pulled up their website, and I'm going to show you a good way to have a look at what BrickX is doing. So generally what we suggest, and a good place to start, is to go down and read their disclaimer. So you'll see hidden in there, it's not hidden, they're running a managed investment scheme, and you can see the number here, ARSN. BrickX platform is a registered scheme number. So they're running a retail scheme which has a product disclosure statement which gives people details about that managed investment scheme. And each person, as you would expect, they're buying a fraction of a property, which you'll see here. They choose your property, buy a brick in a property. They're using the term brick as another term for a unit or an interest in a managed investment scheme. And then people are earning a net rental income per brick. Again, they're getting a return on the investment in their managed investment scheme. So each of these properties that they've got here, cost to buy into one brick in this property is $72 or thereabouts, and that will buy you one piece of the managed investment scheme, or one unit in the managed investment scheme, and then you'll get a return as outlined there. So you'll see here BrickX products are issued by BrickX Financial Services Limited. So if we go back up to our register, you'll start to see some of this come to light. So type in BrickX, search the financial services licensing, and see what they've got. So you'll see this is what we talked about before. So interest in managed investment schemes, and they're operating a registered managed investment scheme, which, as I mentioned before, is called the BrickX platform scheme, which invests, as it says here, in direct real property. So no surprises there. And some of these other authorizations here, such as applying for general insurance products. The reason why you would see that general insurance products on there is because they're no doubt insuring the properties that are contained in the managed investment scheme. So they're issuing managed investment schemes, but then the managed investment scheme is applying for general insurance products, and they're applying for interest in managed investment schemes as well. So that's BrickX. And I'll talk you through is micro investing. So Raise is another business which has done very well. So it's where people invest small amounts of money and then they're able to get exposure to the share market. So they have a very sophisticated looking platform which looks very nice. It makes it easy for people to invest quite small amounts, and that's overlaid with some of these other functionalities such as roundups, lump sums, and some of the promotions that they do with retail businesses to help people or earn small amounts of extra money. But as most people would know, to buy into an ETF on the stock market isn't so simple. So what they're doing is they've built this system around the managed investment scheme system. So I'll take you across to their website and show you through again how we would have a look at that. So raise, here we go, that's their system, looks pretty good. We go down to their disclaimer and it tells us a bit about their licensing. So Raise Investment Australia is their entity, which is an authorised representative. And again here they've got a Raise Investment Australia fund, which is issued by, in this instance, not by themselves, but by a company called In Street Investment Limited. So if we go and have a look at their license. Let me check how that is spelled. So the authorised representative of AFSL, this number. So let's see what that number pops up if we pop that number in there. So we'll see who it is and what's going on. So In Street Investment, George Lucas, who is well known in the FinTech space, and we'll have a look at what they've got here. They've got authorizations, so it looks like there's a lot of reference here to most of the same license 434776, and it's there again. So we go and have a look. We see they're operating a registered managed investment scheme called Raise Invest Funds, as it says in the disclaimer, and their scheme, instead of BrickX, which has direct real property, they've got financial assets. So that allows Raise to invest in anything which is a financial asset. In their instance, my understanding is that they mostly invest in ETFs or various securities. And you'll see here they've got a license to provide financial product advice in a lot of financial products, and they've got dealing in financial products by issuing and applying, again, in an array of financial products, but mostly ones that you'd expect, such as their own managed investment scheme, securities, foreign exchange contracts, and derivatives, which, looking at their business, is not surprising. Okay. All right. Moving on to some other examples. Crowdsource Funding, so that became its own type of license. So that allows small businesses to obtain do a capital raising kind of process for specific types of businesses which have been defined by the Corporations Act now. So again, they've obtained their own type of license, which has been approved by ASIC. And there's a few of those in Australia where you'll see that they've got an online platform. A company offers their shares using a crowdsource funding offer document which meets the specific requirements. And they've got investors on the other side coming into the platform and investing money in exchange for shares. And you'll see there that the crowdsource funding platform is the business which sits in the middle as intermediary and is helping facilitate that share and capital raising. Robo advice. So that's another type of business which is creating automated advice for people. Most of the authorizations on the front end of robo advice relate to the provision of financial product advice. However, much of the monetization on the back of many of the robo-advice platforms is around the dealing and issuing of products and helping people do the purchasing on the back end. Marketplace lending is something that's been quite common, so I'll do a bit more focusing on this particular one. So we have a look here at that there's lots of different ways it can be put together, but you'll see there's a platform where people are operating and offering whether that they want to invest or that they want to borrow money. So you'll see there can be people borrowing. They put the details of what they want to borrow on the platform. And then the platform sits in the middle making loan and interest repayments. On the other side, you've got investors who want to invest money, so they can do it straight through to through the platform. There's different ways that this can be put together. Many of them end up involving a managed investment scheme in the same way that BrickX and Raise operating managed investment schemes. So it's where people are pooling their investment and it's unitized, and then it can be broken up into specific subcategories similar to the way BrickX is. So it's one managed investment scheme with lots of what they call sub schemes to pick up particular properties. So in that same way, people can be investing in one particular loan that sits underneath the managed investment scheme and obtain returns based on that. So that's the most common way. There are, of course, particular possibilities that some of these loans will be picked up by the credit licensing regime. So you might end up with a business that ends up with both an Australian financial services regime as well as a credit licensing regime requirement. Cryptocurrency is another very popular FinTech business, and crypto and blockchain, which we talk about there. So those businesses dealing with cryptocurrencies. Cryptocurrency, in fact, is not considered a financial product under the Corporations Act. So many of the businesses operating in this space are not actually picked up by the AFSL or ACL regime. They're picked up by AUSTRAC registration, which we'll talk about at a later seminar. So that's something to keep in mind, and especially when dealing with blockchain. At this point, we haven't seen much movement towards cryptocurrency being picked up by any of the global regulators as a financial product. It's still sitting outside the boundaries of financial product licensing in most of the major jurisdictions. Payment platforms. So that's, as I mentioned before, is another very popular FinTech business that people are moving into. So you'll see there the standard type of business is where a payer has a currency wallet, whether in multiple currencies or one currency. And there's a merchant sitting in between, obtaining the funds in whichever currency and paying those out, whether to merchants or it can also be just peer-to-peer payments as well. So those types of businesses are picked up in the financial services licensing regime. As I mentioned before, they're considered non-cash payment products. So you'll become the issuer of a non-cash payment product, and you're helping people to obtain that. There can be a foreign exchange contract overlay on that. It will depend on the exact nature of how the foreign exchange elements of that business work. So I will show you one or two examples so that you can see how that looks on the ASIC website. And this is one that we obtained recently. So you'll see here they've got the advice in non-cash payment products, derivatives, and foreign exchange, but they're also issuing deposit products and non-cash payment products, which is their e-wallet. The maker market component, because they've got the foreign exchange and derivatives component, will be in relation to helping people to obtain those foreign exchange contracts, and they're involved in the issuance of those. Okay, so another question that we've got here is the cost of obtaining a credit license or a financial services license. So it depends on a few factors, which I hate to say, given the time, we'll probably go through next week, but it will, the functionality is based on what products and services you're going to have on your license and the number of people that are going to be involved. So our pricing, the way we do it, is that there's some authorizations which are much more complicated than others. So advice and dealing for your standard sort of financial planning kind of business, or a basic robo-advice business, will be closer to the $10,000 mark. Once you start adding things like market making, issuing of financial products such as non-cash payment products, custodial or managed investment scheme, those are authorizations which cost a lot more because they're harder to obtain. ASIC ask a lot more questions and do a lot more diligence in the application process. So those can be anywhere between $30,000 and $60,000, depending on what sort of authorizations you've got and the number of people that you're going to put forward to ASIC as the applicant.